Hello, everyone. Thank you for joining. We'll wait maybe a few more minutes for late joiners to connect, and we'll start. You can say hi in the chat because we can't see you and can't hear you. So. Okay, so let's start. Thank you. Thank you for joining. Hello, everyone. Welcome to CarbonTalks number 4. Today, we're unpacking the draft version of the SBTi corporate net zero standard, what's changing, why it matters, and what it means for you in your decarbonization journey. Whether you're already using SBTi guidance or if you're just trying to stay ahead of the curve, this session is really designed to give you clarity, directions, and of course, and most importantly, answer all of your questions. So we will take those as the webinar unfolds and cover them at the end of the session. So the idea is to, I think, keep at least 15 minutes to answer all of your questions. I'm Agathe Martineau. I'm the head of marketing at Carbometrics. I'll be your moderator today, and I'm joined by two of our lead climate consultants, Estelle Genoux and Valentin Pigeon. They've both been closely following the evolution of the SBTi standards, including, of course, the current consultation on the V2.0 of the corporate net zero standard. So I've seen a few names of clients in the participants list, but for those of you who hear about us for the first time, at Carbometrics, we support private markets, professional, and their portfolio companies in effective decarbonizations. We combine climate advisory with an intuitive and robust platform to help investors and companies translate their climate ambition into action. Today, we work with over 120 financial institutions in Europe, covering more than 1.1 trillion of AUM and over 800 companies all over the world. So without further ado, I'll give you a bit of an overview of what we will be covering today. So for the next hour, first, we'll go through an overview of the main adjustments of the V2.0, the timeline also that SBTi has shared regarding its implementation. Then we'll dig into the core of the subject by unpacking all the technical shifts and especially the target setting methodologies across scope 1, 2, and 3. And finally, we'll wrap up with some of our closing thoughts, especially our opinion on the consultation, and we'll answer all of your questions. So you should see a poll, right? No? Okay, wait a sec. Publish poll, yeah. So now you should see a poll appearing on your screen. So you can answer the question to tell us how familiar you are with the corporate net zero standard and SBTi in general. So that will help, that will give us an idea of how in depth or how much context or elements we should give you. So 15 votes already, 16. Most of you are quite familiar. So yeah, half of the audience is quite familiar or not familiar at all. Some of you have set targets already. So yeah, congrats to that. And none of you is risking themselves to say they're expert and and know about the current V2.0 revision. So yeah, I mean, there's still a few seconds left to answer, but most of them are quite familiar. Okay. So moving forward, I'll leave you to the floor with the main adjustments.
Thank you, Agathe, for the introduction. Good morning, everyone. Happy to be here to talk with you about the new SBTi framework. So before jumping into the details, a quick introduction about what is the SBTi, if you have no idea. So this organization was created in 2015 after the signature of the Paris Agreement. And basically the goal of this organization is to provide a robust framework to set decarbonization targets for both corporates, but also financial institutions. So They have been developing these standards for a decade so far. And as far as last year, more than 10,000 companies were committed to the SBTi, so planning to set targets or have their targets validated. And the numbers basically keep growing. And there are also more than 250 financial institutions that are committed. So basically, the SBTi is reviewing its methodology frequently, and this is what everything is about here today. So during the last month, the SBTi has created a new framework, so which is this the version 2.0 of its standard for corporates. And this draft methodology has been proposed to review by to an open review, basically, and we participated to this review. And so the question is, why the SBTi has proposed a new version of its framework. So basically, the idea is to be even more ambitious. As you may know, climate change is still a problem, and emissions are not reducing fast enough to tackle this issue. So the idea of the SBTi was to basically align with the most recent science. Since a few years ago, the sixth report of the IPCC was published. And basically, the idea is to improve the credibility by strengthening the processes needed to submit the targets and validate the targets, and also address some challenges that were existing within the framework and the rules, especially regarding scope 3. So here is a small synthesis of all the changes, and we are basically going to go through the details of all of those changes. But basically, you have changes over all the target setting rules for the different scopes. You have different changes, depending on the different scopes. Changes regarding the categorization of companies and what it implies for them, stronger commitment for companies, and also change regarding data quality, the assurance regarding the data, and also how the validation and the renewal process is going to work. So this is basically all the changes, and we are going to go through it in the next slides.
Yes, hi everyone. Very happy to be here as well. Just to give you a little overview of the timeline of the SBTi. So as Valentin said, they have launched a consultation over the past months regarding this new version of the corporate net zero standard, which is now over. So now the SBTi is reviewing the collected answers, and in parallel, they have launched a testing of the framework for voluntary companies to collect practical feedback. And so the finalized version of this methodology will be issued in 2026, and it will become mandatory for target setting from 2027 on. So before 2027, the current methodology remains valid. And just as a disclaimer, everything that we will present in the next slides regarding the new version of the methodology is still under reviewed by the SBTi. So what we present is not 100% sure to be in the final methodology.
So now going into the details of all the changes, and there are many. So starting with the categorization changes. So here the changes are quite slight. Basically, in the past you had two types of target setting rules for SME on one side. So basically companies with less than 250 employees, 50 million euros of turnover. So which had target to set basically only on scope 1 and 2, and then the rest of the companies which had to follow the general rules for corporate. So here the categorization is a bit more specific, and there is basically a change in the now the categorization take into account the geography of the company. Basically, if you are a large company, you are categorized as A, whatever the country. If you are a medium-sized company in upper income or a medium income countries, you are category A. And if you are in low income country, you are category B, and all small companies are in category B. So you have a map on the SBTi website to see which countries are classified as sorted as upper middle and lower middle income. And basically the implications for these two companies category is that the level of ambition is higher for corporates in category A, so large companies and medium-sized companies in rich country, to be synthetic. So the idea is now that a company in category A will have to set net zero and also near-term targets. So near-term targets are targets up to 5 years, and net zero targets are targets to be set up to 2050. And so both will be mandatory. In the past, you had the choice to set only near terms or near terms and net zero target. You have a new time frame to submit target after the entry check. Before you had 24 months, now it's 12 months. So you have to set targets on the scope 3 now, which is always required, whatever the share of the scope 3 emissions in your total emission. Before you have a 40% threshold. You have also now to have a transition plan. In the past, when submitting target to the SBTi, you have to describe in a few words what you were going to do to reach your target. Now you will have to have a real detailed transition plan with decarbonization actions. And the last point is that you will have also to have third-party insurance for your GHG inventory. So basically a third party auditing your GHG inventory to be sure that everything has been calculated the right way. So you have a robust baseline, and then you have you can basically track your emissions in a way that is as precise as possible. And lastly, before going into the details of the changes regarding the different scopes, the general rules. So before near-term targets, you could set the target here up to 10 years, so between 5 and 10 years. Now all the near-term targets will be 5 years for everyone. And what comes with this change is that now the target setting will be cyclic, meaning that every 5 years you will have to review your target and also assess your performance, namely saying, did you achieve the target or did you underperform? And for that, the new SBTi framework is going to provide fixed language to describe this performance regarding the targets. So there will be transparency and clarity about how did companies perform regarding their targets. And lastly, there were no specific commitment in terms of improving the data year after year when doing your carbon footprint and measuring your emissions. Now, companies will have also to commit on improving the data quality, especially on scope 3 emissions and on the categories of emissions on which companies have set targets.
So in terms of the target setting in itself, there are a few changes as well. So the first one is that in the current methodology, SBTi allows companies to set targets on scope 1 and 2 combined. So in the next version, so the 2.0 version, it will not be possible anymore. So you will have to set 2 separate targets, one for scope 1 and one for scope 2. As for the scope 1 specifically, SBTi is testing a new methodology to set targets. So they introduce the notion of carbon budget. And so the global idea is that based on how companies will have used their carbon budget on Scope 1, they will have to adjust their Scope 1 net zero year target to, let's say, compensate the GHG emissions that have been emitted over their carbon budget. So it's a kind of correction mechanism that will be presented in the very next slide. So on the left part of the slide, this is the new methodology on Scope 1 that the SBTi is suggesting. And on the right part, you have the current methodology that is applicable in the current version of the corporate standard. So in the current version, the SBTi has defined a linear decrease pathway on a 2020 basis. So all companies must decarbonize their Scope 1 in the same proportions, but basically the later you start, the more important the decrease you will have to reach will be. So this version is quite easy to understand and quite easy to compute, actually. But it doesn't account for historical performance, sorry. And so the proposed version is by the SBTi is here to, let's say, correct that historical performance. So the idea is that the companies will have to assess the carbon performance between 2020 and their base year, and compare it to the reference scenarios that has been set by the SBTi on the Scope 1. And so see if their Scope 1 emissions are over the reference scenario, there is an overshoot, and this overshoot has to be compensated by adjusting the net zero target year. So as you may understand, this methodology is quite rigorous, and it takes into account the fact that climate change is linked to the concentration of carbon in the atmosphere, but it clearly adds a layer of complexity because companies will have to assess their historical performance on Scope 1, and also they will have potentially to manage several net zero years.
Regarding Scope 2, so there is one main change. So in the current version of the standard, you have the choice when you set the Scope 2 targets between choosing location-based emissions or market-based emissions. So for those who are not familiar with those approaches, basically when you compute your Scope 2 emission using the location base, so Scope 2 emissions are relating to the electricity consumption of your company mainly. So under the location-based approach, you compute the emissions associated with this electricity consumption using the emission factor of the electricity of the countries of the country where your company or facilities are. And then you have the market-based approach, which allows you to take advantage of the procurement of renewable electricity using renewable energy certificates, such as guarantees of origin in the EU. So basically, you have the choice currently between these two modes of calculation, even though you have to declare and disclose both emissions when you are reporting your emissions. You have only one target to set on one of the approaches. Now, the big change that is proposed by the SBTi is to make location-based target setting mandatory, and in addition to that, you would need to also set a target on either your market-based emissions or either the zero carbon electricity target, which is currently the renewable energy target. So basically, currently this target consists in saying that in 2030, 100% of your electricity will be covered by renewable energy certificates like guarantees of origin. They're going to adjust this target a bit with a sourcing alignment method. So you will have to align with 100% procurement by 2050 or something. So this doesn't change that much. But the big change is that now you will have one location-based and one market-based target, let's say. And so this could be a bit problematic because the idea of the scope 2 target, it is that it has to be 0 tons of CO2 by 2050. As you may know, you cannot decrease your electricity consumption to 0 in a company, otherwise your company is not going to work anymore. And the only way under the location-based approach to have 0 tons of CO2 is to have your company based in a country where the electricity is 100% renewable, and there are no countries like that in the world, with the exception maybe of Norway and Iceland. Or to have basically solar panels on your roof that provide 100% of your electricity consumption. So that's a bit complicated, let's say, and you have few levers because you depend on the decarbonization of the electricity in the countries where you are located. Whereas the market-based approach, you can proactively source your electricity, the origin of your electricity, which enables you to more easily reach your target. So basically, our recommendation on this was to leave things as they are currently and leave the choice to companies between setting targets under the market-based approach or the location-based approach, but keeping also the obligation to disclose both emissions in the location-based and market-based approach to see how the electricity consumption is changing over time, because it's not because you are purchasing renewable electricity that you cannot make something to optimize your electricity consumption.
So now the infamous scope 3. So there are actually a few changes as well on scope 3, but one of the major change is related to the coverage rules of scope 3 targets. So in other terms, what to include in the scope 3 commitment. So the current rule, as you may know, is that 67% at least of scope 3 must be covered by targets. So in the new version of the SBTi standard, this rule will be abandoned, and the new rule would be that all categories of scope 3 that represent more than 5% of the total scope 3 emissions must be covered with targets. In addition to that, SBTi introduces the concept of emission-intensive activities. So they have defined a list of what they consider to be emission-intensive categories. And so for companies that have emission-intensive activities, and if these activities represent more than 1% of scope 3 or more than 10,000 tons of CO2 equivalent, then companies will have to set targets on these emission-intensive activities. So this is quite a big change compared to the current version of the SBTi, and we have synthesized the new rules in the next slides just to make it a little more readable. So this is just a synthesis of how to know whether to set a target on scope 3 categories or emission-intensive activities. As I said, the rule is that you need to cover all the categories that represent more than 5% of the total scope 3 emissions, and add to that commitment all the emission-intensive activities that represent more than 1% of total scope 3 emissions. Very quickly, we've also put the list of what SBTi consider to be emission-intensive activities. So we won't spend too much time on this slide, but what to keep in mind is that the categories that will come up the most will, of course, depend on the sectors of your company, but we can assume that transport will come quite often as it's a recurring category, whatever the business is. And so in terms of the type of targets in themselves, there are also a few changes, but what you need to keep in mind is that the philosophy remains the same. So the targets in absolute reduction and intensity reductions remain valid. And they actually remain the main options to set targets on scope 3 categories, yes. However, SBTi implies that supplier engagement targets become mandatory in addition to setting absolute or intensity reduction targets. So the idea behind that is that most of the time reaching a scope 3 targets implies engaging the whole value chain and of course the suppliers. And in this new version of the standard, the target would be that 100% of suppliers, with respect to what we've seen, the emission intensive activities are aligned or aligning by 2030. And the rest of the suppliers have to be engaged by the net zero target year of the company. So it's quite a good option, we believe, but this would add again a layer of complexity because you would have to manage several targets, so the intensity or absolute reduction target plus the supplier engagement targets, which is not the case at the moment. And also one thing to add to the target setting methodology is that the SBTi introduces a new type of target for the emission intensive activities, so the activities that we've seen in the previous slides. So they called this type of targets the alignment targets. And the idea behind that is that companies with emission intensive activities will have to demonstrate a certain percentage of alignments in their spend or revenue. And this alignment will be calculated against net zero benchmarks that have been provided by the SBTR or provided by specific sectoral organizations.
To finish with the scope 3 changes, a small focus on a proposal that is that the SBTi is doing regarding what they call untraceable emission sources. So this concerns some categories of emissions, like subcontracted transportation or business travels. So when physical traceability is not possible or, quote, unsurmountable barrier exists, SBTi would allow the possibility to use what they call indirect mitigation measure to tackle these scope 3 emissions. So what does it mean, indirect mitigation? So the SBTi is giving a very clear example. So you may have seen this when you are booking a flight ticket. Some companies currently propose to pay a bit more to pay for sustainable aviation fuel associated with your ticket. So basically, when you are choosing this option, this does not mean that a little amount corresponding to your consumption as a passenger will be put in the plane, but that somehow you finance the purchase of sustainable aviation fuel. So this means that physically nothing is changing, but somehow this could help the companies to increase their procurement in terms of sustainable aviation fuel. You can compare this somehow to what is possible with scope 2 emissions. So in very, very specific situations, the SBTi could allow this kind of indirect mitigation. And one of the condition for that would be that in addition, companies would have to implement internal policies regarding the categories at stake. So for instance, I guess for business travels, companies would have to implement business travel policies saying, for instance, to the employees, please limit as much as possible the use of flights for business travel, favor low carbon transportation like train, or do some remote meeting. So that's the idea, and basically our opinion on this is that we are not in favor of such an option, because it could give the opportunity to companies to use those levers, which we believe are not that efficient to tackle climate change, and that mitigation options are always possible. Regarding the flights, you can try to implement policies to actually decrease the number of flights taken in your companies, and this would have a real impact on your carbon footprint. A few words lastly about residual emissions. So currently, when you are setting net zero targets, so targets up to 2050, you commit to decrease your emissions as much as possible. So basically, you have to decrease by at least 90% compared to your base year. And you commit to remove what they call the residual emissions, so the 10% of emissions that you cannot decrease for technical reasons, let's say. And that's it for the current framework. In the new framework, SBTi is proposing different options for setting additional removal targets that could be temporary removals. Namely, you would need to already, as a company, finance carbon removals before reaching your net zero target, to start to address in advance the problem of residual emission, and increasing our global capacity to store carbon, and then reduce the concentration of greenhouse gases in the atmosphere, and so to limit the impact of climate change in the end. So we believe that this could be a good thing if it remains optional. Namely, we believe that you should remove your residual emissions when you reach your net zero target year, but the fact of having interim removal, so starting before your net zero year, should be kept optional, just to give flexibility to companies.
Okay, so our closing thoughts on this new version of the SBTi. So we've gone through the major changes of the new methodology, and we'll be very happy to take your question on that. But just to wrap up on what's our thoughts on the new version of the standard. As you've seen, as you've understand, this new version, this new framework is way more ambitious, than the previous version of the standard, which is a good thing regarding the current context and the urgency of the context, and what we've seen over the past month is the current climate backlash context. And I think that the current news demonstrate this daily. But the main point of attention that we've addressed, and we've done an answer to the SBTi in that sense, is that this framework adds way more complexity to the framework and the methodology to set targets compared to the previous version. And to us, it's very important to keep things, let's say, readable or as simple as they can be, because we fear that bringing too much complexity to the table will potentially create a backlash context, as we've seen, for instance, with the CSRD in Europe. And so we hope that this new framework won't discourage companies from taking actions regarding climate and engage in ambitious climate strategy, which are really, really urgent and important to address. So we have suggested a few things to the SBTi to, in that perspective, to simplify or to keep things the most simple they can be without tackling the ambitiousness of the framework. And the something that also needs to be kept in mind is that beside all the changes that are suggested by the SBTi, the framework remains not very relevant or appropriate for certain types of company, in particular for companies that provide climate solutions, and also for infrastructure operators, because the construction emissions are not amortized in the GHG protocol. So this can be an issue that is not addressed by the new version of SBTi, even though they have taken into account a lot of issues that have been addressed previously regarding the implementability of the SBTi methodology. So all in all, our global recommendation and practical recommendation for companies willing to commit to the SBTi or having committed already to the SBTi is not to be discouraged. We highly recommend that you continue your climate strategy engagement process, and that you don't slow down in that perspective. What you need to keep in mind is that this new framework will be implemented from 2027 on. Before that, you can still use the current version of the methodology. And again, we highly recommend you still set targets using that framework, because as you will see in the next slide, the targets for all companies that have already set targets will remain valid until at your target date, if it's before 2030, or if it's after 2030, your targets will have to be updated and in 2030. So it means, all in all, that your targets remain valid until 2030. SBTi will provide guidances on how to switch from the previous methodology to the new version of the methodology. They're working on that. And for companies having to renew their targets from 2027, or who wants to set targets from 2027, you will have to use that new version of the standard. But as we've seen as a disclaimer in the introduction, there's a lot more steps to go before having the new version of the methodology finalized. And there are probably a few changes that will happen between what we've presented in this webinar and what will actually be implemented by the SBTi. Do you want to do the conclusion words, Agathe, or is it time for the Q&As?
Yes, so we will move to the questions. So thank you. There are quite a lot of those. We'll answer some of those by writing the answer, mainly for the questions where the answer will be the specific and final details are still under decision, because I think what needs to be clarified is amongst everything that we've presented, there's a lot of things that will be more or less kept as is. And some of this, especially on scope 3, are under quite review. I mean, they specifically asked for feedback during the process. So Valentin and Estelle will have this in mind while answering to you. And I leave the mic to Valentin to start answering the questions. So do you want to take them in order? Yeah, okay.
Yes, so we have quite a lot of questions. So starting with the first ones, so question from Colin: does the third-party insurance review need to happen every year? So from our current understanding, you will have to have this third-party insurance when you are submitting your target, and so when you are setting your base year, and also when you will need to assess the performance of your targets. So the last carbon footprint, the carbon footprint at your target year. you will have also to have this third-party insurance to be just to check and to be sure that your performance against the target has been calculated the right way. Question from Corinne, what do you mean by fixed language? So regarding this performance against the target, fixed language means that you will have to use specific sentences already provided by SBTi to say if you have overperformed or underperformed against your target. So you will you won't have the choice in the words you will be using, basically. So everyone has the same language and says the same thing. We have a question from Thibaut about what is happening when you have subsidiaries. So from our understanding, nothing is going to change in this regard. So you will have to set targets over the group level of a company. But if you want to have more detail about this question, Thibaut, don't hesitate to write to us so we can go a bit more in the details. Then for Estelle, maybe we have 3 questions from Ka that are on the same topic. So basically, how are we expecting companies to react to this more rigorous and strict update of the SBTi standard? What are the main expected roadblocks for companies? And yes, will this new version of the standard be a barrier to entry for some companies that were maybe considering a target submission?
Yeah, so it's quite a broad topic, and this is something, as we said in the conclusion, it's something we have raised to the SBTi. We believe it can be, it adds complexity, it adds ambition and it adds complexity, but it shouldn't be seen as a barrier to climate commitment. We'll see in the last version, in the ultimate version of the methodology, what SBTi decides to keep and what they decide to leave. So it's quite hard to assess and to give you a finalized answer to that questions. Yeah, so I believe it's a réponse de Normand, but we will be able to answer in more detailed perspective once the ultimate version of the methodology will be issued, given what the feedbacks to the SBTi would have been. I think there is a question from Ladislas about is it possible to set intensity targets without this implying an absolute reduction in emissions? So in that perspective, so on scope 1 and 2, it doesn't changes. You still have to set targets in absolute values. And for scope 3, again, the targets don't really change. So you still have the possibility to set intensity targets for companies that have an important growth rate or growth perspectives. So this doesn't really change, actually. The philosophy of the target setting doesn't really change. Another question from Ladislas. Does the type of activity have an impact on the targets, especially when companies are developing solutions to tackle climate change? Indeed, so this is something, well, I hope we have addressed that in the conclusion, but this is something that has not been taken into account in this new version of the standard. So the SBTi doesn't make a specific case for a company developing climate solutions, making it harder for them to commit to the SBTi and to set targets, because the targets that have been developed by the SBTi don't really address the specificities of climate solutions, which have a positive impact on the climate. So this is a limitation to the new methodology, indeed.
We have a question from Julian. So what happens if a company has more than 1K suppliers, for instance? So I think this question refers to the supplier engagement target, and this is a very good question. So it's already an issue that we see with companies we help building SBTi targets. So indeed, when choosing your targets between absolute mitigation, intensity mitigation, or supplier engagement, which are the three options currently, the choice highly depends on your cost structure and how are your spent concentrated over a small number of suppliers or not. So basically, what we have seen recently in the past months is that if you have your expenses quite concentrated over, let's say, 20, 30 suppliers, even though you have 1,000 suppliers, it is quite feasible to set supplier engagement targets, while you have some companies where the expenses are are not concentrated, and you can have thousands of suppliers and all of them having quite the same share in terms of spend. And in this case, it's way harder to set a supplier engagement target. And so for this reason, in this case, we recommend to set other types of targets like the absolute reduction target or the intensity reduction target. And thus, it is for this reason that we did not recommend to the SBTi to make the supplier engagement target mandatory for companies, because for some companies that are in the second case I was mentioning, it could be a nightmare, basically, especially also because in the new framework, the SBTi imposes companies to have their targets validated by the SBTi, which is not the case currently. So this adds another level of complexity because it makes things less straightforward. We have a question from Gauthier. Is the emission intensive activity criterion related to the activity of the company that is setting the targets or the supplier activity? It's the second option. Basically, when you calculate your carbon footprint, you have to sort your emissions by activities, and you have to look at all activities and see if they are in the list of the emission intensive activities. So for instance, if you are a company selling any type of product, you have some subcontracted transportation, and so you will have a line somewhere in your carbon footprint that is about subcontracted transportation, which is a high an emission intensive activity. So if it is more than 1% or 10 kilotons of CO2, you would need to set a specific target on those emissions, even though maybe category 4, so upstream transportation, is not a big category if you're in your company. A small question from this last again, could the GHG protocol one day shift towards amortizing emissions? I don't believe so. As the GHG protocol slowly evolves, and that's an euphemism. We are waiting for a few years now for the new version of the GHG protocol standard about the removals and the agriculture sector, for instance, and it's not coming. So I'm not sure that such a change is going to happen in the next years. And a question from Lisa also, but I think Estelle already answered it. But yes, basically climate solutions companies like companies in renewable energy, they are not fitted for the SBTi in general, and this is still the case for the new framework. And also, as Estelle mentioned already, the companies in the infrastructure sector are also not suited because of the way the emissions are accounted for such companies. And we can add that indeed there is yeah, that's what we could say about that. And I think that we made it through all the questions. So I guess we're fine.
Yes, thank you. If you don't have any more questions, as I was saying to Colleen in the questions, we can put together the answers in a little document, so you have them written along with the slides that will be shared to you after the webinar. I think in a few days, probably either tomorrow or maybe on Monday. And the replay also will be available. I think Livestorm will send you a automatic message with the link of the replay. If you're one of our clients, of course, and you have additional questions, you can talk to your carbon climate consultants about them. Otherwise, it was a pleasure being with you this morning. We hope it was really insightful. We are, of course, impatient to know what the second public consultation will be, and it's supposed to be coming end of 2025. We'll probably have the second webinar to debrief this, considering the feedback that has been given to SBTi. So we wish you a really nice rest of your day, and goodbye. See you later.
Thank you very much. Have a very nice day.